and before that you had DXY running here. So this is the 1 hour chart. DXY was running, fair enough, and it did everything that it could. And we were looking for DXY to get into 104. Where is that? 104.80 to 104.90, right? That was our number. Come on, open up. Right. So this is where that 104.80 was coming from. Sorry, 104.90 was coming from the 21 on the week, and then 104.80 rather was coming from this chart. I think we've been discussing this chart for a good, good amount of time. I think last week. So we got our number 104.80, 104.90. That was the range that was expected to hit. Now, if it does stay above here, then I'm expecting it to move up all the way here into. Come on, this is slow. Right, all the way up here into this moving average. And if there are, if you find time to go back, look into those recordings, I would encourage that. And we've been saying that it would take this path all the way up to this number, right? And yeah, it will go hit that at some point in time. Probably, if it happens today, well and good. Friday makes sense if it does go there, and then we'll have some more room to the downside on SPX. And it does make sense for it to go hit here now because there is not real any sort of what do you call resistance between this point and this point. So it would actually, I think it will go revert to the mean on the week. But this should act as pretty decent resistance. Very likely it's going to go hit this number and take a breather. 105.40, 105.45 area, right? That clears, then we'll reassess into probably 105.76. Amazingly, one thing is this number. This number is not moving up. Now, what is happening is, as we've been talking about that 5.5 on the Fed funds rate, right? So if the idea is for Fed funds rate to get to 5.5, then then the US 10, why is it not loading up? Okay, then the US 10 should also move along with that, above 4. As of now, it should have been above 4. I don't know why it's not there. I was expecting it to go above 4 on the PPI report itself. It did not do that. That's kind of strange for me. However, this is still, it's. I think it's still going there. I think it'll still move above 4, perhaps into this CPI, not CPI. What is that called? FOMC. Right, so March FOMC, I think it will move above 4, or even before that, I'm expecting it to move above 4. Now the math here is that as you have 10-year moving above 4, you will have the SPX moving closer to 39, right? Right now, SPX is sitting at about 39.61, 39.62 area, give or take 6 points behind ES. So that's where it is sitting. So if you have 10-year, it will go above this. Right now, it's hitting the second standard deviation on the week. That's where it is finding some resistance, and then very likely it will clear that resistance. And once it clears that resistance, very likely it's going to go ahead this 4.2 at some point in time, probably closer to FOMC, or during that FOMC time. So yeah, if this happens, you will have SPX closer to 39 or even sub 39. And let's say if it goes beyond this 4 point, at some point in time, it has to go beyond that 4.2 number, the second standard deviation on the. Let's put a range on it, right? Here is the second standard deviation on Heiken Ashi, about 4.17, and here's the number for the regular 4.21. So that's the range, 4.17 to 4.21. That's what's going to happen with the 10-year. So if 10-year takes this path to the upside, after it clears the second standard deviation here, if it takes the path to the upside, very likely you'll have SPX moving down, perhaps closer to 3900 or even sub 3900, right? So that's the math there. And however, if for some reason, if the 10-year starts to move to the downside, then obviously you will have some push to the upside in ES and SPX. That's the math. Right, now let's go here using the technicals. My understanding is that it's going to go hit this number very likely. Right now, Apple is bouncing on the new hour, fair enough, and it's kind of stopped, going to the downside. So now, if it starts to come to the downside, this is where it should go hit this 39.58. That's where I'm getting my 39.58 from. That breaches 39.55. That's again the same number, and that breaches very likely the 200 moving average here. This is where it is headed. 3950 area, and also gotta keep a watch on the mean here at about 3950. So these are two major bounce spots. You'll find a decent support here at the mean, and also here at this number, right? 3950. I'm expecting a bounce there. By the time it comes down all the way here, here, and here, this would have been pretty decent oversold here. Williams R is anywhere oversold, so we'll expect a bounce there. However, this thing we've been tracking this thing, right? The MACD. This is just how MACD works. By the way, the data is not that terrible. It's just oversold conditions that have put SPX in this place, this condition right now. So this is coming down, and I'm expecting it to hit the zero line, and then probably the moment it starts to go below the zero line, then we'll start to see, some. I think some buying will come in here. I think some buying will come in here, and if it fails to cross to the upside, then we'll continue to see it breach below the zero line and probably continue down into the below zero line, right? Why am I saying some bounce? Because the oversold conditions will prevail here, and very likely you'll see a cross on SMI here. That's the reason I'm looking for that bounce. If the bounce fails, then MACD will anyways, tell us if the bounce is confirmed or not, and if the bounce fails, this thing will continue to the downside, right? Yeah, so let's go here. And again, this is the chart that primarily I trade on. And this chart is telling me that it is oversold here, right? Oversold conditions. And if the SMI crosses to the upside, then very likely it will come back into the second standard deviation. The second standard deviation in the previous hour was 3980. That's where I was getting my bounce number from, 3980. Right, so right now if it bounces, the second standard deviation is sitting right at 3975. So that becomes the next target, right, to the upside. And to the downside, as we spoke, that's the downside, and this is the upside, immediate upside. And if you want to play this trade, you want to go here, probably down here, and the 3972. If that clears, then you want to look for that 3975, then perhaps 3977. And probably you want to be, if you want an immediate trade, you want to be going here and trading this number. Let's go here. What does the line say? Line is still red, so I don't want to go into a trade, the bounce trade just yet. I'll wait for this line to go blue. That's when I will probably get into that trade, if I want to get into that bounce trade. Till then, I'm okay sitting out. Cool. So this is where the trade is actually coming from, right? The DXY. We just discussed this chart, but I still want to go into this chart because this is the chart that is dominating everything. The 10-year is still sitting at about 3.92. A couple of days back, it was at 3.98. So this is not driving it. This is the chart that is driving it. So peak dollar. I think the dollar has peaked, but still, this is a bounce that we were expecting based on this chart. Right, based on this chart, we were expecting this bounce. Come on, this is slow, right? So oversold condition. This is just how technicals work. The oversold and it bounces, and this chart will keep dominating the rest of the day, and we'll keep a close watch on the 10-year as well. If 10-year bounces, and along with that DXY keeps going, very likely you'll see further downside in the ES or SPX, whichever way you want to look at it. Right, let's get into Apple now. Apple, this was the line, right? This was the line. Probably when the market opens, it will open. Probably it will come down a bit more. Probably here at 147.20 or even 147. I don't know that, but that's the line that pretty much everybody's hanging their hat on right now. If that line breaches, next line you want to watch is right here. The second standard deviation to the first standard deviation to the downside. Is that first or second? Yeah, first standard deviation. So 146.45 is the first standard deviation, and that breaches very likely will come down into 145. That breaches very likely 144.20, and plotting nothing sub 142.80 today. I don't think it's going to breach that today. And I think this is a hard ask about 142.80. Let's see if it does breach the 200 moving average. I think majority of the people will exit the trade here. Whoever has been holding on to this trade, very likely they'll exit that trade, pushing definitely into this number 145.40, sorry 146.40. And if it breaches there, we'll reassess. You know the drill, right? One line after the other, after another. We want to be watching this chart here as well. There are pretty decent bounce spots here. 8 on the week is always a good bounce spot, right? If the price is coming from the top to bottom, 8 is always a decent bounce spot. If the price is going down from the bottom to up, then 8 will act as pretty decent resistance spot. The same thing, the same phenomenon is happening right now. It is hitting that number and starting to bounce there. But if that breaches, very likely you want to expect it to come down here. This number should act as pretty decent support again. But if that breaches, very likely I'm expecting it to revert to the mean, especially if you see DXY keep pushing up into its mean on the week. I would expect Apple to come back into its mean on the week as well. So that's about 4 points, 3.5 points from where we are right now. So keep a watch on that. Let's go here on the lower time frames. 1 hour is still not oversold on any measure. So the RSI is there and it's triggering that push to the upside because the trigger RSI is hitting the bottom. It is triggering it is what it's supposed to do. It's doing what it's supposed to do. So if I believe in this trade, yeah, first target would have been, if it's violating this, first target would have been second standard deviation. Then whatever this dot is here, the half trend, that clears. Then we expect it to move all the way up here into the 5. Right? That's the expectation there. Doesn't mean that it's going to work out that way because of the negative sentiment as of now, and because of DXY moving up, and US 10 is also starting to move up now. So because of those reasons, Apple might still struggle here. So if you want to place a trade to the upside, you want to go down here on a lower time frame. This is where you want to watch the trade. And these bounces are coming from these lower time frames getting oversold, and that's where you're seeing these bounces. And I don't want to be playing upside today. I will still want to be playing downside until at least ES gets into this number, right? Until this number, I would want to be playing downside. If that breaches this number, mm, this is where I would want to probably exit, in a meaningful manner. 39.50 area, I would want to exit, that urge to play the downside. And probably I'll look forward for a bounce, right? Either here or here. So yeah, that's the idea there. And let's get into a bit of Microsoft here. But this chart, the DXY and the US 10, that's the only thing that will dominate today. That's pretty clear right now. So this is the weekly chart for Microsoft. 8 breaches, you want to expect it to come back into this number. Same thing is happening with Apple right now. Same thing. If Apple and Microsoft behaves the same way, then you expect the market to do what exactly Apple and Microsoft are doing, right? Right now they're both moving lower, and you expect the market to move lower. Yeah, so that numbers are pretty satisfying there. The hit of 21, a bounce again. If it reaches a 21 on the week, expect it to come back to 47.60, and the mean reversion is about 244. If the mean reversion happens quicker enough, to 43.80 to 44. If that happens quick enough, then we can look for another bounce quick enough. If it doesn't happen, if it takes time, then we gotta keep an eye on that. Let's get on the daily for Microsoft. And yeah, and then, again, I'm seeing the same thing happen on Twitter. Death, mega death, this, that, and the other. It doesn't work that way. Trust me. By now you should have seen that. If you have Apple and Microsoft moving in the same direction, you will have an accelerated move in SPX and ES, right? That's just how that works. So without these two moving in the same direction, you will not have a clear move in ES or SPX. Right, so right here it's holding this line, the 50 EMA. That breaches the same thing. Next is to 48.90, next is to 48.36, and very likely we'll see another decent sized bounce here at about 247.06. And notice that this thing, right? We've been watching this thing. Stochastic is where you should have taken a trade. this is where you would have confirmed the trade to the downside, right? So yeah, it's the same thing, same logic. If it bounces here, again we'll look for another bounce. How much of a bounce? Probably it will come back up all the way here into the 200 moving average, 252, rather 253, and I think it should face a decent resistance at about 253. And if it does bounce all the way up to 253, you will see Apple bounce as well, and that means you will not see the market move down further, right? However, I'm thinking that it will need to move lower, breach below the second standard deviation, or rather for one standard deviation, come down here, and then 50 moving average on the day is where I think a decent bounce. And I think because, and after this bounce, like it bounced here, right? After the 50-day moving average bounce, I'm still thinking after the bounce there is further downside. Very likely it'll come back into 243. Why? Because this is still pushing to the downside. So very likely it will, even if it comes down to here, the zero line, I think we should have this a Microsoft sub 50 moving average. So let's see how it works out. Let's go here on the, I'm expecting another at least now 14 cents out of this number, 14, 15 cents. Where is that Microsoft? Right. So till this thing, reaches the 50 moving average on the week, I think stocks will keep pushing down. This is where the bounce is coming from, and it is doing what it's supposed to do, hitting the trigger RSI being triggering the bounce. If the bounce continues, second standard deviation is getting hit here, and if the bounce continues, very likely it's going to go hit this number first, 251, then very likely this dot right here, 251.60, and then the 5 is sitting at about 252. This is the nearest expectation of a bounce, but if you want to still trade that, you want to go here and look forward for, man, oh, this is slow. This is slow. Right. So this is oversold. We are getting a bounce. Fair enough. Here's the baseline from half trend. If that clears the 5, that clears. Very likely is going to go push into 251.20, and if that clears, then 251.30. Not really expecting anything, above this dot actually, 251.19 area. But if it does come back up and clear that, then let's reassess further into that. Let's go into Tesla a bit. This is high beta, right? This will react to whatever this is doing. This will react to that. High beta stocks are pure interest rate based. And yesterday we were looking forward for this number to get tested about 190, and I think we should have that today. Let's see if the mean reversion has happened on Tesla or not. First thing we want to see is a mean reversion. Uh, yeah. Imagine going from a giganet to this kind of speed. I think it's 50 Mbps here. Right, so this is what I'm expecting Tesla to, and wherever this will open, this line at open, the mean on the day, wherever that is, I'm expecting Tesla to hit that. Today, right now, as of now, where it is 193, let's say 193.30 to 193 area. So if Tesla hits this number, I'm expecting a bounce here. After the bounce, if the bounce fails, very likely it's going to come back down here into 188. Not really expecting this to happen today, 188, but let's keep an eye on this. But I think to the downside, very likely the mean reversion is pretty much there today. The mean reversion has to happen, and then we look for another bounce. The MACD is still crossed to the downside. I'm still expecting this to pull it down at least to the mean. Right, and let's see where this is sitting. It's right about at 190. So yeah, if it comes back down here to the mean, I'm expecting a bounce, 193 area bounce. If the mean breaches, then I'm expecting it to come down into the 5 on the week, and the 21. I'm expecting a bounce here at 190 area. Right, 193, then 190. If that breaches, then we'll look for further upside. And how much of a bounce? If it bounces at the mean, then we're looking at a push all the way up here into 198 to 199. If Apple starts to push, then very likely it'll come back into, why am I saying this? It'll come back here because let's say if DXY hits that 105.40, 105.45, between 105.40 to 105.50 and starts to take a breather from there, then very likely you will see the high beta stocks move to the upside immediately, right? And why Tesla? Because of that investor day thingy coming up. So that's the reason, that bounce might be pretty decent there. Let's go here. I don't even want to look at Netflix because I'll hate myself if I look at it. All right. This line here is saying that this is the bottom, and it makes sense why it is saying that because if you're looking at the trigger RSI, it is about to, give us that trigger to the upside. How much of a bounce? Probably it will come back up here into 196, and the 5 is sitting all the way up here at 198. So let's see how it bounces. Then that's the thing with high beta stocks. They are high beta stocks for a reason. And today, if Tesla moves beyond this 200 moving average, yesterday this was acting as pretty decent support. I'm expecting this to act as pretty decent resistance today. And if it clears above this resistance, very likely you'll see the market go positive, right? Very likely you'll see the. So why am I saying that? Because Tesla is a sentiment stock, and if Tesla shows strength above the 200 moving average, how much of strength we don't know, but if it clears the 200 moving average, it will immediately find itself again under resistance at about 201. However, even if it does go above, let's say 201, or even gets to a positive number, let's say about 202 is the positive here, right? Yesterday's close at about 202, but if it does go here at about 201 and comes closer to this number here, 202, then I think the market sentiment would immediately change on that. Right. And you can actually expect that to happen because of that investor day. And as expected, this is going to hit here, and we are expecting first bounce there. Right. What else we need to look at? Tesla, Apple, Microsoft, DXY, ES. What else? What's the chat say? He says zero line is that both lines of MACD hitting. Yes, yes, yeah. One line is enough, but both lines hitting. That's good. That's very good. Can we go over Nvidia as well? Yeah, yeah, yeah. Yeah, that is surprising. There's a reason for that. We'll get into that. New home sales data. Yes, yeah, that's the one that I'm watching actually. So the reason that I'm watching for a bounce is exactly that new homes data. I'm thinking the new home data will come in lighter than expected, so that should probably give that bounce for the stocks. Let's go here into Nvidia. Should have been much more down actually, and I'm expecting it to come back down. And the reason it's not going down as of now is technicals are there for it to go down, but the future revenue expectations are high. There is a about $10,000 chip, AI chip that they are manufacturing right now, and we all know about AI because of that chat. AI is not a new thing, by the way. AI is not a new thing. AI has been there for like I don't know 10, 12 years since the time while I was into IT. I left IT about 3 years back, and so in terms of technology, 3 years is like I'm a dinosaur. So yeah, AI has moved pretty fast, and now Chat GPT is not the only thing. That's just a learning, language learning model. That's nothing but the idea of that AI coming into, taking a center stage, that will propel NVIDIA and other chip stocks, even AMD and all that. NVIDIA, because most of these GPUs and all that, uh, those are supplied by NVIDIA, right? So that's the idea there. That's the understanding of why it will move further up. They have pricing power basically, and their end clients are mostly industrial clients, right? So and now with the EVs and all the new cars and all the new trucks and all that, they all will use smart chips, AI chips. So right, so I'm expecting it to take a breather. How deep of a breather? Probably it should go into this 214, 215 at some point in time. Maybe not today. At some point in time, it has to do that. Let's go here. Yeah. So I think where is the five? Five is right here. 220. Not saying it will come back down into the five, but it has to come back down at least into one standard deviation. It is violating the second standard deviation. Doesn't mean that it cannot go up to the third standard deviation, but it is definitely in violation of the second standard deviation rule, and this thing is still crossed to the downside, right? So I think it should come back down. When would that happen? I'm not sure. Today's pull to the downside, especially if Microsoft starts to move to the downside, and it will bring it back at least into the one standard deviation. At about one standard deviation right now is sitting about 225. Maybe that will move a little bit higher, probably into right about 228 or something. But then it has to come back down into one standard deviation, either to push to the upside, or once the one standard deviation is tested, we'll see if it's going to go up to again to the second standard deviation, or will it come down to the 5. Right now the 5 is sitting about 220, and it makes sense for it to come back down to 220. But after the open, this 5 might actually move upside and probably be here at about 225 or something. All right, and let's go here. Yeah, this chart is clearly saying it needs to come back down. And 5 breach, age breach, and very likely the mean reversion on the 1 hour will happen right here, and we'll look for another bounce. And after the bounce, I think we can still expect it to come back into 229, the 21. That breaches right about here, 228. I think we need to take another call here. We need to, when I say take a call, I mean reassess the situation here at the mean, and if the mean breaches, then expect it to come back all the way here at 228. That breaches, I'm expecting it to actually come back down at 224. That's the idea right now. But let's see. Let's let it come back down to the mean. Mean has to revert, and then we'll see this is getting oversold. Probably we'll look for another bounce there. If the mean breaches, then further downside. Cool thing. Anything else we are looking at? Prob- yeah, I think mean reversion will happen even before it opens. All right, let's move. Oh, we are in live trading. All right, so let's stay here. Why did I open up live trading? Oh, maybe because I was trading pre-market. Okay. Biden is considering adding new payroll tax on home and yeah, right. Yep. Weird thing. Um, it, uh, JPM is sitting at